Did you know that 90% of beginner traders lose money? The big question is, which side will you be on? Most people jump into trading dreaming of getting rich quick. But the harsh reality is, most of them lose their money, and they lose it fast. It's not because trading is some impossible puzzle, but because they dive in without a game plan, without a strategy. In this video, I'm going to share a simple and safe trading strategy designed for beginners to help you survive and actually win in the market instead of getting crushed by it. First things first, and this is the golden rule: never ever trade with money you can't afford to lose. I'm talking about your rent money, your grocery money, or any cash you rely on for daily life. If you trade with money you desperately need, your emotions will take over. Fear and greed will dictate your every move, and trust me, emotions are the #1 enemy of a successful trader. When you're trading with risk capital, money you're okay with losing, you can think clearly and make logical decisions. Next, you need to focus. Beginners often make the mistake of having dozens of charts open, trying to trade everything at once. It's overwhelming and leads to terrible decisions. Instead, pick one market. It could be stocks, forex, or crypto. Just choose one to start. Then pick one time frame to master. Maybe it's the 15-minute chart, the 1 hour, or the daily chart. Simplicity is your best friend here. Focusing on one market and one time frame allows you to understand its personality and patterns, which is how you build consistency. Now, let's talk about your actual strategy. You don't need 5 different indicators flashing on your screen, making it look like a spaceship cockpit. Keep it simple. Seriously, your strategy should focus on 3 core things: identifying the trend directioners, the market going up, down, or sideways, pinpointing key support and resistance levels. These are the price floors and ceilings. And finally, having crystal clear rules for when you enter and exit a trade. Here's a good test. If you can't explain your strategy to a 10-year-old, it's too complicated. This next point is non-negotiable. Always use a stop loss. Think of a stop loss as the seatbelt for your trading account. It's an order that automatically closes your trade at a predetermined price to limit your loss. One bad trade without a stop loss can wipe out your entire account. It's that serious. People think winning traders are right all the time. That's a myth. Winning traders are just incredibly good at controlling their losses, and the stop loss is their most important tool. Let's talk about managing your money. This is what separates the pros from the amateurs. You should only risk 1 to 2% of your total account on any single trade. So, if you have a $1,000 account, you should only be risking $10 to $20 per trade. Yes, it sounds small, but this is how you stay in the game. It ensures that a string of losses won't knock you out. You'll survive long enough to catch the winning trades that make all the difference. This is professional risk management. Another common pitfall for beginners is overtrading. They feel like they need to be in a trade all the time to make money. This is completely false. More trades do not equal more profit. In fact, it usually means more losses and more commissions paid. Quality over quantity, always. One well-planned, high-probability trade is infinitely better than 10 impulsive, sloppy ones. Remember, the market isn't going anywhere. It will be there tomorrow and the day after that. Be patient and wait for your perfect setup. Finally, you need to track every single trade. Trading without a journal is like driving blind. For every trade you take, you must write down why you entered, why you exited, your profit or loss, and how you were feeling at the time. This journal is your personal feedback loop. It's how you identify your mistakes, recognize your strengths, and refine your strategy over time. This is how you actually learn and improve as a trader. So, let's wrap this up. Trading is not a get-rich-quick scheme or an ATM. It's a serious business. If you treat it like one by controlling your risk, staying disciplined, and consistently following a solid plan, you give yourself a real shot at success. But if you ignore these principles, the market will gladly take your money. It's as simple as that. Thanks for watching. If you found this helpful, give it a like and subscribe for more content to help you on your trading journey.